Joining us now is Marco Soriano, managing partner and economist at the Soriano Group. Again, we go back to the March 1st, the trade and aluminum tariffs that were chucked out by the Trump administration. The Russell has been the real winner of the major market gauges since then.
It's been great. It's been great. When you're looking at the Russell, it's really the retail and tech and the small caps that are using such technologies that are ahead of the game, and that's where we should be looking at.
But in terms of valuation, are you comfortable with where the valuations are, given the recent run-up at least?
Absolutely. I mean, you have to look at as well the political geographies right now, what's happening in Europe, what's happening in the U.S., and that kind of triggers this new cycle that everybody was not expecting, and the valuations are just right on point.
How do you factor that in? How do you quantify a political risk out of a White House that is hard to predict?
Yeah, I think you kind of put it aside. You accept the fact that it's going to bring increased volatility. But then when we talk Russell 2000, which are the smaller, as we talked earlier, U.S.-focused growth companies, I would go even a step lower and look at the private sector, because I think that's where the real innovation. We also run a venture capital fund, so we're seeing technology affect every sector of business that there is, from garbage to transportation to travel, as you and I spoke off.
True, all the sectors, yeah.
So everything out there. So I was saying, do you see one specific area where you think that there's more of an opportunity than others?
Well, so the trends and patterns right now, a little bit of that blockchain going on, where there's digital ledgers that are showing you transparency. So a lot of small tech companies are adapting that. Whether it's a use of a token or not, that's a whole different story. But I think, like any small tech company, you have to prove yourself where you are rather than go global without having enough money to do that expansion.
And just to go back to the Russell 2000, it is more domestic, right? It's a reflection of domestic markets and growth in the United States versus, let's say, the S&P 500.
Right.
There's a little bit of a difference there. Are you seeing the reason why that growth is happening is because of tax cuts? So a lot of these companies, these smaller cap companies, are really benefiting from the tax cuts, especially since their effective tax rate is so much higher than the multinationals.
That's kind of tricky. I think this year we're going to kind of see this trend, this hockey stick of these companies, but after that it will be the trick to see if that is in effect what is causing it. So right now we're still speculating.
It's too soon, no?
I mean, proving themselves, proving their technologies, augmenting their clientele, and then thinking globally, I think would be the right strategy.
We're watching crude oil, crude topping $72 a barrel. That's the highest level since November of 2014. But with rising energy prices, it feeds into the inflation worries, which triggered the market rout in early February about higher interest rates. So you have the 10-year yesterday, the yield, it closed at 3.09%. It actually hit kind of a cycle high. At what point does the 10-year yield, at what point do higher interest rates really kill this market rally?
So you asked me two different questions. And one is the use of ethanol, how it was promoted to ramp up this oil around the world, right? And the second thing is, you're talking about the rates, that the U.S. Treasury rates that go along this. Well, nobody likes higher prices, that's for sure. But I think they'll go lower. I mean, this is the predictions that we're having.
So I look at it and I see the 10-year up at 3.09. I think it can creep higher if it's moving higher for the right reasons. If it's moving higher because we're actually seeing real growth underneath the economy that's supporting the higher interest rate. And I think that's what we're seeing right now. So I think it's not going to spook people unless you get something that says the economy is actually slowing or stopping. So we start talking recession and you started to see rates creeping higher. That would be a major problem and a cause for a sell-off. X that, we're fine.
These retail sales numbers, broadly, the kind of overall retail sales numbers we got earlier in the week for last month, they were very strong. I think the year-over-year number was 4.7% growth, which is so incredible. And some of the estimates I looked at for the second quarter have taken the growth rate up to close to 3%, 2.9%. So that does seem to be the case. And it's interesting that with all of the talk about North Korea threatening to pull out of the summit talks, what's going on with trade, you haven't seen Treasury buying. So people they're not running for safety in this environment.
All right, so think about, having 186 countries out there with 182 different currencies being exchanged. The U.S. dollar still remains the strongest, regardless. 60% of our currencies out there in the world being used for petrodollars. So I'm not really easily scared with this. I think we should be all right.
Marco, it's good to see you. Marco Soriano of the Soriano Group, General Managing Partner there. Thank you for being here. Good to see you. Come
Thank
back.
you.